I think there's a very common misconception out there that it takes a lot of money to invest in real estate, and it's simply not true. Does it help to have a lot of money? Well, sure it does, but it's not required to get in the game. So in this video, I'm going to share with you 5 ways you can get started with little money. And if you stay until the end, I'll compare the 5 ways and help you figure out if one of those will be a great way for you to get started. Now let me start describing each of the 5 approaches. I'll start with the one that takes probably the least amount of money to get started, and then I'll work my way up from there. Number 1 is REITs. Real estate investment trusts, or REITs, are companies that own, operate, and finance income-generating real estate. The concept of REITs was first coined back in the 1960s because there was a desire for investors like you and I to buy and sell shares of real estate, just like you get mutual funds and stocks, for example. It was a very novel concept at the time, and it was really groundbreaking. And today, REITs hold over $4.5 trillion of assets, which is a huge amount. And they can be found on the major stock exchanges like the New York Stock Exchange, for example. REITs typically specialize in certain types of real estate. It could be multifamily, it could be data centers, it could be cell phone towers. There's a lot of different types of real estate that these REITs get involved with. The firm collects money through these shares, and they use that money to buy and manage these properties. So what are the benefits of REITs? Well, first of all, it takes very little money to get started. Even just a few dollars could get you in the game, which is one of the biggest factors going for it. It's also very easy to buy. You can go through almost any online brokerage site to buy them. And one great thing about REITs versus a lot of other real estate is that you can actually sell it whenever you want and recoup your money back, which is a big plus for REITs. They're also great for diversification because you can put a little bit of money in various different types of investments, which can diversify your holdings. And these are fairly passive. You really have nothing to do but just buy the share and let the operator run the properties. Now, that all sounds great, but okay, what are the cons here? Well, probably the biggest one is that the returns aren't that great. They're okay, but when you compare it to other types of real estate, it's on the low side. You don't have any tax advantages like being able to take depreciation. Why? Because you don't really own any property. You own a share of a company that owns property, but that's about it. So there's not a whole lot of the real estate benefits you get when you use REITs. And then finally, you don't have any control in what happens with these properties, which actually could be a good thing if you're not an experienced real estate investor. But it's something else to consider because you're not going to have the say into how these properties are bought or run or anything, and you probably won't have much visibility to it. But it's just something good to know. Number 2 is crowdfunding sites. If you've never heard of this approach, that's okay because it's fairly new and it's really caught on over the last 5 years or so. Have you heard of Kickstarter or GoFundMe? They collect money from the general public for all sorts of purposes, to fund a new business idea, to support a family who's lost a home in a fire, for example, you name it. Well, this same approach to raising money is also now being done with real estate. Crowdfunding sites raise money to purchase properties or to invest into a fund that purchases a number of properties. Popular sites are ones like Fundrise or Realty Mogul or CrowdStreet. They all focus in real estate. And while I haven't tried this myself, it's certainly one that seems to be pretty popular out there that I want to mention to you. So what are some of the benefits? Well, as with REITs, it's really easy to get into the game with these. There's very little starting capital needed. Even as low as $500 investment can work with some of these. As with REITs, you can diversify. So you can put a small amount of money into this opportunity or that opportunity, and you can spread out sort of your risk amongst a variety of investments. And also, like REITs, it's passive. So there's really no work you need to do other than enrolling and submitting your money. Now, what about the cons? They're kind of similar to the cons that we talked about in REITs. The returns aren't that great. It is what it is. And because you're dealing with a crowdfunding site, they take some fees off of what you get in return from these investments. And another con is that you may need to be an accredited investor to invest in some of these opportunities. If you don't know what an accredited investor is, I made a video about it, which you can check out right here. As with REITs, you don't have much control over what happens with the property or the decisions that are made. That's really managed by the real estate investor that's leading that deal. And a big difference between this and REITs is that you just can't pull your money out whenever you want to. More than likely, once your money is in, it stays in until there is some sort of an event, like a sale or something, to get the money back out. So before going any further, are you enjoying this video? If so, please tap the like button so YouTube knows that people are finding this valuable and this message can get out to more immigrants. Now, back to the video. Number 3, rent a room. Now, you may not have thought about this recently, but just hear me out for a second. If you want to make money on the real estate that you already own, this is a great option. In fact, it's how Airbnb got its start, by renting out sofas in people's homes. And if you have an underutilized room in your home, you can try this out. Now, the first two ideas that I talked about, REITs and crowdfunding, are fairly passive. Now, this one isn't quite as passive, but it's not overly complicated. My wife and I rent out an entire home using this approach, and it's been a blast learning how to do it, and the returns are pretty good. So what are the benefits? Well, it's pretty easy to get started. If you've got a room already, the hard part's done. It's also low risk because you already have the property and you don't need much capital to get started or to get involved in this, as long as the room's furnished. So it's a pretty low barrier to entry here. And you can make extra income utilizing the asset that you already have. You can start and stop whenever you'd like. You're not locked into any time period to do this. And it's fairly passive. I mean, at first you got to get it set up and there's some work to do, but once you get it going, it can become a fairly passive thing, which is doable. Now, what about the cons? Well, I'd say, it does take a little work to get started, like I said. So, it's not as simple as the REITs and crowdfunding, but again, it's not rocket science. You can figure this out. But the biggest con for most people is the thought of having a stranger in your home. Airbnb does a pretty decent job of vetting guests, but you just never know. Now, this year in the home that we've been renting, we've rented to over 50 different groups, and not once did we have an issue, and most people seem very, very nice. But I get it if you're kind of worried. So, maybe you just want to give it a try and see how it goes. One of the great things about this option is that you're learning a new skill that you could expand with by, say, renting your whole home, or buying another home and renting that. So it's really a pretty cool set of skills to learn. Number 4 is buy a small multifamily property. Another approach is to buy a small multifamily property like a duplex or a triplex that has 3 units in it, and move into one of those units. This is something commonly referred to as a house hack. Why is it a house hack? Because you're actually living in a unit and there's other people in other units on the same property that are helping you pay your mortgage. That's why I included it in this list, because it's a way to almost live rent-free if you do this right. Now, buying a property like this in the area that you live may or may not be possible, depending on if it's a very high-cost area or not. But where I live, in Kentucky, for example, or many other places in the country, this can definitely work, especially with all the first-time home buyer and 3% down incentives and all that are out there. There's ways to get this done. So what are the benefits? Well, you get to live rent-free, hopefully. That's a huge benefit. You get to own real estate, which means you can get the benefits of owning real estate. Your renters can help pay down your mortgage. You can appreciate over time with the market, hopefully. Get tax advantages. These are all things that you get with real estate that you would get by doing this. Your returns could be quite good, given that you're doing the work and you own the property overall. And you're learning a valuable skill on how to be a landlord, which, if you're looking to expand your own personal portfolio, that's a good way to get started. Now, what about the cons? Well, buying a property and potentially rehabbing it to make it ready to rent and to live in is definitely not passive. It can take a lot of work on your part to make it work. But that's okay. If you want to learn how to be a landlord, this is a great way to get started. It's also not as inexpensive as a REIT or a crowdfunding. This is definitely more money, depending on where you're trying to invest. But it's something that for you to get rent-free housing is pretty cool. And number 5 is real estate syndications. The last option I'm going to highlight is one that I talk a lot about in this channel, and that's investing in real estate syndications. If you don't know what a real estate syndication is, it's basically a way for a group of investors to pool their money together to purchase a property or to put into a fund to buy a number of properties. They've become quite popular over the last 10 years or so, and for good reason. What are the benefits? Well, the first one is that you're combining your money with that of other investors to buy a property that's much larger than you could on your own. You're getting the power of the group to work for you. You're hopefully working with a very experienced real estate operator that knows how to run these properties, so that's a big plus. It's a passive investment for you, so if you're a busy professional, this is a great way to go. And you also get the tax advantages of owning real estate, which is really cool. But probably most importantly, the returns can be quite good, especially because you're a passive investor. Typically, passive investments, the returns aren't that great when I talked about REITs and all that, but in this case, the returns can be pretty good. The cons of syndications are really 2. The first one is that it does take a minimum investment of probably at least $50,000 to get involved. For some of you, you might say, oh, that's a lot of money. And others might say, no, that's pretty doable. And the second thing is that this is not a liquid investment. In other words, once you put the money into the syndication, you can't get your money back out until the business plan has been achieved. It could be the sale of the property, or it could be a refinance. It really depends on the strategy, which you would know ahead of time before investing. I've created a number of videos talking about syndications, which you can check out by clicking the links below in the description. So there you have it, 5 ways to get started in real estate without a whole lot of money. How do these compare? Well, if you only have a few $1,000s, let's say, then REITs or crowdfunding or renting out a room in your home are certainly great options. Yes, they may not give you huge returns, but they'll give you some experience in how these things work, and you'll get more and more familiar with real estate, which is the whole point. If you have a little more money, like say up to $100,000, then you can consider buying a small multifamily property and house hacking or living in one of the units, or you could stay completely passive and invest in a real estate syndication. So you've heard these 5 different options, and maybe you're wondering, well, how active do I want to be in this? Do I want this to be something that I put a lot of time and effort into, or do I really want this to be more passive? If you're struggling with that question, I recommend checking out this video right here that'll help you think through your options. Thank you for watching the Immigrant Wealth channel.